Good afternoon, traders. This is Christian from Traffic Trade Group, and this is your end of week video for the 1st of November, first trading day of the month. I will get to a little bit of the price action for the day, and then I'll talk about just some charts I'm watching for next week. Risk disclaimer in front of you. Everything that we're going through is for information purpose only, not giving out any advice or recommendations. Please read the full risk disclaimer there. So bottom line, indices finished up for the day. SPY up 0.4 of a percentage point. Qs 0.7. IWM up 0.5%, right? All green, looking pretty good. So, that's the positive that I would say. But the takeaway that I have been noticing for the last couple of weeks is that this market kind of comes hot out of the gate for the first hour. And it's something to be cognizant of because there's trading opportunities. You could almost think of that first 1 hour right now, and full risk disclaimer on this because this will change. This isn't going to be how the market doesn't stay like this, but you could almost think of the first hour of the trading day as the whole trading day. Why? Because if you look over the last 3 weeks, there's not been much that happens after the first hour and a half of the trading day. It's mostly fades, right? And I think that there's a couple of reasons for that. And I'm not going to give you, I'm not going to rehash that. I've put this on Twitter a couple times, but that's been the story. And I think you'll see like a lot of names, not every name, but a lot of names, they're making their highs in the first hour of the day. And they could end up green on the day, but there's more fades that are happening than names that are closing around the highs of the day. All right. And you could look at a couple things here. I talked about this in yesterday's video, so I'm not going to rehash this, but you could look at the McClellan Summation Index, both NYSE and NASI. Both of those are trending down. So we've got a major breadth issue right now in the market. And the market started pretty strong today. Breadth was very strong, but it faded over the course of the day. So right now, that's probably about a 2-3 week pattern that we've got going on. And what we're going to want to see as the month progresses is for that to change. So number one, I think being patient, if you're looking for more than just that first hour of the day move, I think being patient, for more swing trades, I think makes sense. And understanding that this first hour of the day phenomenon isn't going to last forever. I think it's just a lack of institutional support right now in the market. And think about that. It's not a tough generalization to make when you've got all these events that's going on. Institutions do not want to commit right now to this market. They want to see how things are going to turn out. Now, you can draw up your scenario analysis, and one of the things in that scenario analysis is that we know that November seasonality, and towards the end of the year, we're now entering the stronger seasonal months, so things should that a little bit more. So you might see more commitment to some things versus just the first hour of the trading session. In addition, as we're working our way through earnings season, it's generally a decent amount of chop during earnings season because, folks are trying to basically figure out, are names, are companies healthy, and they probably want to position in some of the names that are doing well and really try to get out of or try to avoid some of the names that did not have good results. But also the main thing to realize there too is that a lot of the company buyback programs, which have been fueling this market, that's been fueling this market, company buyback plans, as well as, that tendency for the individual to continue to buy in their 401k plan and in their IRA, right? That adds an underlying bid to the market. But the first one that I mentioned, the company buyback plans, are basically they're turned off right now because it's around earnings season, right? And those companies are not, depending on, every company's a little bit different in regards to that, but a lot of companies, they do not buy back any shares for a period a little bit before earnings and a little bit after earnings. So that could be why you're seeing this price action that just doesn't carry through, especially past the morning. So that's basically the takeaways for now. and just understanding that, because, you know, you could take advantage of this. You know, I had 3 great trades in the beginning of the day, one of which I took off, you know, because it faded. And 2 other ones, I just kind of, you know, I took targets in both of those trades, and I just kind of stayed in them for now, right? Because I have stop prices, and we'll go from there. I want to talk about a couple technicals here, right? So here's the weekly chart of the S&P. I mean, this isn't a nice defined trend. It's been that way all year long, but you got to be careful once this starts to break down a little bit. And we're starting to see that breakdown, right? And it wouldn't surprise me if we kind of check down to this line. And when this has happened, you know, what's the takeaway from this, right? If we go down a little bit lower, it will bring out most likely the buy the dip mentality, right? And again, look at how far away from the valuary that we are for the year. Now let's draw in closer and let's look at this in terms of the daily chart. You know, here's where we are, right? We did not close inside we tried to close inside the value area for the month, right? This is the new month value area. So this becomes important because this is all of this is roughly 1 standard deviation of last month's activity. So if we begin to kind of break below that activity, right, you know that we're beginning to kind of trend down, right? Now, the 50-day moving average, I think, will be important, and we'll see if we can hold that next week. But we've had several breaks of the 50-day moving average over the last few months, and we've managed to basically rebound. Again, that buy the dip mentality has happened, but considering we don't have a lot of support, you know, then you know, I think that you basically will use things like I will use things like the 5-period moving average, right, and understand that price is below here. Second of all, you know, with everybody understanding, now sometimes I do play in my mind a little bit of contrarian, right? Everybody knows that this November seasonality is strong. So if we whoosh lower a little bit, that will clean out a lot of the weekends in the market. And that will sometimes, once that happens, then the market begins to kind of, once you get that angst out of the market and swoosh lower, right, then the market will sometimes rebound, you know, based on that, right? Again, that's more of a contrarian thought. So let me continue to go along here, and then I'll give you my conclusion. Here's the weekly chart of SPY. Not SPY, of the Qs. This looks a little bit hairy here, right? It does look like this could be a double top for now. Also note that the RSI is fading as we're going down. Now that is a divergence, but a divergence can be you know, shaken off or worked through for now. And full disclosure, I did get long the Qs today because it's a defined trade, right? So if you look at this value area for the month, we did close inside the value area. If we break back below that, I'll get out of the trade, right? It's a very simple trade. Like every trade, there's risk involved. It's not my favorite setup because I don't like, it's not a position of strength that we're below the 20 and the 5-period moving average, but overall the market's in an uptrend now. So I do have this level to keep in mind. So it's a little bit of a risky trade, but you know, again, that's what I'm focused on, is the bottom of the value area. That's what my system says that I can do. All right, then let's look at IWM. Right, and again, this happens all the time, right? You put on a trade, that's what your stop prices are for. Here's IWM. Again, could be a double top. We don't know. This is a very sideways looking chart. Some try to figure this chart out. I do less of that with IWM. I think it's very sideways. The positive here is it's holding the 50-day moving average. Let's look at a couple. Let's look at the equally weighted. Notice what the equally weighted S&P is doing, right? That has broken the 50-day moving average. As discussed, we've got weaker breadth right now, and it's not a surprise that RSP is weaker right now than SPY, right? And when you look at the equally weighted Qs, that also does not look particularly great. It closed right around the bottom of the value area. Again, it's still in an uptrend. I think you just have to have some patience in here. A couple things that I would be watching for next week. I thought that this chart was very interesting, right? This is the biotech chart, which actually outperformed. Now, this is sideways as heck, right? I generally, whenever you've got a range like this, I wait for us to break, right? Some people like to position in things because we are in a bull market, and usually in a bull market, sideways price action results higher. So I get the I get the viewpoint to say, hey, I'm going to take a shot at this because I think it's going to resolve higher. We're in a bull market. Like I said, I like to wait for a little bit of confirmation, but this is something to watch. I also like this relationship too. When you look at XBI over XLV healthcare, you can kind of see that this is a very interesting chart, and I would call this more of a risk on type feel if we could break out of this range. This is look at how sideways this has been going, right? And it's not always sideways. Equally weighted biotech over healthcare, you could see that this has gone through periods where biotech has outperformed and periods back in 2021 where biotech really underperformed in relation to healthcare. So this may be trying to kind of break here. It's had a couple starts and stops, but I think this will be something interesting to watch. Just a couple other charts I want to go through. Here's Bitcoin. Bitcoin tried to break this range, and let's face it, October was a really nice month for Bitcoin. Now let's see if it can do something special, which is break higher, right? And we're right at that cusp of breaking higher. Right now, when you look at the daily chart, I've got a really nice level to watch here, right? And that's the top of the value area, right? If we break into that, so right now the potential is there for a breakout, but we start to move back inside the value area, then I think you got to go back into the having patience, right? Because this could break into the value area and just keep going. There's multiple scenarios that could happen here. It could break into the value area, test the 20-day moving average and begin to move higher. But for now, watch this top of value that's 69,620, right? And I'm trying to be optimistic here. I did go long this in the morning. I could take that off if it doesn't. I have a firm stop on this too. And if it breaks, I'll be out of the trade. Just to look at the sector, at what sectors are showing short-term momentum. Right now, you just have a couple, right? As we've talked about, that the breadth has really deteriorated over the last couple weeks. So consumer discretionary, so first of all, the biggest weight, I think Amazon is about a 23% weight in this. Can this thing break out? That's going to be the main question. So we stopped right at this 200 level. That's the level to watch. Going forward, if you are interested in Amazon, you're going to want to see a break above 200. Right? It's been a tough name, I think. The dips have been bought, but we're back to where we were basically in July, right? So that's the level to watch there. So that's going to be the key driver in the consumer discretionary ETF. Right, here's what this looks like. Yes, it's above all those short-term moving averages. I would watch if it could stay above the value area and then maybe make it to this VPOC up here. That level to watch is 199.56. All right, consumer, this is communications, right? Google and Meta are a big portion of this. This does not look bad, right? It's holding above the 5-period moving average. Again, we don't have many charts that are doing that. So I think that you want to pay attention to the relative strength for now, especially in groups that have already had a lot of their earnings finished. And we just had both of those big names report this week. So we'll keep an eye on that 5-period moving average. One other thing that I wanted to talk about really quickly is kind of the conclusion is be patient. My main message in yesterday's video was that similar, that there's been deterioration. I didn't think that today's price action I thought it was kind of like we've seen this week, except for yesterday, where the market has tried to go higher and just really didn't have any conviction to charge higher, right? A lot of the move happened pre-market and in the first hour of the day, and that was it. All right. So we're going to want to see better breadth, right? And breadth, seeing that improve as we go along. We're not there yet, right? And we've got all these events next week. I'm really surprised the Fed meeting is actually on a Thursday next week. They moved that from Wednesday to Thursday. So interesting that they've done that. I'm trying to remember the last time that I've seen the Fed move their from a normal Wednesday to a Thursday. Besides that, just a little bit about how I trade. If you're a regular viewer of my videos, I don't make these predictions, and I don't do a lot of this, where people do a lot of selling on Twitter, meaning like they're selling you on their setup. Oh, this is going to explode higher and so forth, right? I don't do any of that. I think that, so I try to be very objective in what I'm doing. What the value areas and the MarketWebs allow me to do is take the emotion, that really bad emotion, which gets people into trouble. I try to take that out of the equation, right? That's where people really get into trouble, in my experience. I've been doing this a long time. People really get into trouble. Like, conviction is a good thing to have, but you have to know where a trade is not going to work. And when you insert that much emotion into things, getting people riled up about how great a setup looks, you'll find that what happens is a lot of retail traders, unfortunately, will get stuck in positions because they go from a high to a low, and then they don't know what to do. So you try to treat each trade and each setup equally, and looking at, before you get involved in a trade, what you think is going to happen and where you're going to get out. I mentioned a couple things that I'm in. I gave a shot today, and I mentioned the word stop. You have to have that in your mindset, right? You can mix in options too if you like. The one thing that's nice about options is you can only lose the premium. Now, it is very hard to swing trade options. I see folks try to do it all the time. You could have a winner or two. If the market is super strong, swing trading options will work. But as breadth deteriorates, you will lose a lot of money very quickly in options, because a lot of that premium will just get washed out, right? And you can't really use a stop price in options because they move too quickly. You can't stop yourself out at a 50% loss of premium. It doesn't work that way. That's in trading, and I talk about this in my end of month P&L video, right? There's been mainly four types of trades, right? You're either going to have a small winner, a big winner, which everybody wants, a small loser, or a big loser. You can't stop yourself out in an option 50% down. That's a big loser, right? And you can't if you have a lot of those number four trades, you can't possibly be a profitable trader. So I trade more stock than anything else because it allows me to get out of things for a small loss, right? That's the risk of doing business. No, but you have to define, in my opinion, knowing where you're defining what your trade, where you're going to get out, both on the upside and on the downside, will helps you take that emotion out. The more that you can take the emotion out and get this craziness about how great a setup looks, I think the more beneficial and the more your the more your results will line up a little bit better. You'll have more consistent results the more that you're doing these types of things. Guys, have a great weekend. I hope that helped, and I'll see you guys on Monday.